The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, we go into the breach, dear friends. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
Yeah, they got it today. So what's going on? Well, we're up 7 points on the S&P cash. Is that the story? No, the story is the volume. The medium is the message. 1.87 billion shares on the New York Stock Exchange tape. And we all know what that allows me to do. What does it allow me to do? The Wimpy song. Wimpy. Yes, thank you, Mr. Gladbags. Volume is wimpy. It is light. It is variable. And it tells you that, again, we have some interesting moves going on up here. I'm looking at a few out here. I think we've got, I'm kind of looking at that Monday, thinking that probably by late afternoon, we're going to have a clearer signal. But my guess is that we've put in at least some kind of top out here in the marketplace. I do not have any short positions in indexes, nor will I until I get some confirmation. We do have one short position in the daily newsletter, and it's done very well for us. Got almost a perfect entry on it. And we'll see what else comes. But I'm now starting to get some signals. I had a bunch of them in the newsletter this morning. So normally you get a couple of days warning on those signals. But at least we are getting some now that are a little bit clearer and telling me that we've got some issues. Some ABCs I saw setting up. We'll go through the movers of the last day today. And, of course, when news breaks, I'm here to fix it. But the first thing we have to know is our history to repeat it.
There it's all just a little bit of history repeating.
It is history repeating. On this day in 1916, in San Francisco, a bomb goes off at a Preparedness Day parade on Market Street, killing 10 people and wounding 40. We tend to think as terrorism is something that happens only today. In fact, right now on most of the cable stations, another terrorist attack in Germany with all the fingerprints of terrorists from North Africa. The traditional mall shooting in a place, of course, where you get 10 years for just having a gun, where there's no easy way to get one. Someone found one. But to me, the more interesting thing is, of course, everybody saying that, or at least many people trying to say that there's no problem with terrorism. They're all JVs. And, of course, no longer does that come out of their mouth. Within 15 seconds, another terrorist attack comes out. So the ostrich theory not working well for those that reject reality. But it will continue on. Anyway. Very interesting legal case. It basically boiled down to this, and that was some kind of communist labor radicals working on the docks there decided to blow some people up. A couple of them went to jail. One of them was going to get hung about 20 years later. They kept their mouth shut, and somebody finally pardoned them when the right party came in favor. There's nothing new in there. There's always malcontents. There always has been since people could figure out that they could cause mass casualties. It's not the first time. And, of course, we talked about the one when it was 1920, the bomb went off right there in front of the New York Stock Exchange. These things are not new, but because, of course, very few people study history, they all think it's new. There's very little that happens that isn't new. But on this day in 1916, nothing new changed. Just something happened that's happened before and will happen again. Of course, yesterday we started talking about it. I find that it's very interesting that there's almost no chatter on this G20 meeting going on this weekend. Almost always we see a lot of action out of these meetings, especially in the Forex market. Everybody wants to be nice and behaved going into them. China had its Pearl Harbor attacks on one of these meetings. It wasn't a G20, I think it was a G7, coming out the other side. Kind of sneak attacks. We've also seen it with the Swiss right after a G20 or G7 meeting. They all like to play nice when they're getting together so they can shake each other's hands and lie to each other, and then they go out the door and do what they want to do anyway. But a lot of discussions going on. We can find out whether or not everybody wants to hang together or hang separately. My guess is we're going to start seeing this come Sunday night. So you may want to at least peek at the futures coming in to Sunday night. In the news of the strange that hits the trading floor, The Wolf of Hollywood. The Wolf of Wall Street movie, of course, came out, but guess what? It's tied to a giant scam, a movie about a scam tied to a giant scam. Federal officials have charged a $3.5 billion Malaysian money laundering scheme help finance the Leonardo DiCaprio movie, Wolf of Wall Street. The Hollywood tale that parallels the corruption charges of U.S. officials seeks to recover $1.3 billion of missing funds. And one of the more interesting things is that apparently they laundered a lot of money from the Saudis, and this went to Malaysia, and there's missing $35 million jets and all kinds of high-end artwork, like what was it? I'd have to look at the article again, but it's the heavy hitters from the art world, a Renoir and a few other things like that. So art paralleling reality, paralleling art, and of course ending up in a giant money laundering scam. So appropriate for the Wolf of Wall Street. The IMF, more breaking the law issues out here. The top court has ruled that Christine Lagarde must stand trial in France over a 2008 arbitration ruling that handed 400 million euros, that's about, what, 50 US dollars, to a politically connected business magnate. It looks like they got our hands all over this. And is it just me, or does everybody in France work on the dole and the payout and everything else? Hasn't everybody that's been in power for the last 20 years over there ended up in court and in the docks, as they said? But apparently she pushed about 400 million euros, which is what, about $500 million, somebody their way. I'd have to go back and look at the Forex market back then. We'll be back after this brief timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Amazon in a little hot water today. I think it's the sign of a few things to come. Maybe the first chinks in the armor of Amazon. If you're a dope-smoking FM hippie, maggot-infested FM-type acid-dropping kind of person and have to have original Birkenstocks, well, you may have a problem. About 80% of them sold on Amazon, from the article I read, are fake. So if you're out there playing hacky sack and you're trying to get one up on your original Birkenstocks, might be a problem out there. The Birkenstock, of course, is it was very interesting to read the article. 275 years old, long before hacky sack playing smelly people. Was very interesting to see just how long they'd been around, how long they'd been making the shoes. But they had a gut full of counterfeits and unauthorized selling on the online shopping site. So they are getting out and saying that Amazon cannot sell their shoes. The question is, as always, is this the roach theory? You see one cockroach. Are there 100 more with this exact same problem? Unclear from this, but Amazon not showing a lot of weakness in any charts yet. But it's normally these are the kind of things that you see in the news. Other than that, it still is a problem. But somebody says it was bound to happen. You kind of think that maybe eBay would be a lot more susceptible to this. The Amazon could control the people selling stuff on its site, but maybe they didn't want to. Maybe they just didn't pay attention until it became a big problem. But interesting to see at least a few people starting to look that way. Peter Thiel, of course, was on the convention last night. Not a whole lot to talk about his speech. I was wondering how fast, though, that the people of Silicon Valley who praise free speech would punish him for actually using it. And there are a great many articles out kind of demonizing him this day. Of course, the more interesting one was that was kind of easily checked was that of course, his firm is pushing or does have I can't even say it, Panelar tier, who knows? It's such a secret company that no one knows. It's backed by the CIA, at least quote, quote, by rumors. They put some cash into it, and he is running the show. That is the big data analysis company that came out of a lot of the work from the NSA. And of course, they were yelling and screaming today that he was able to buy shares at a 40% discount. And guess what? Everybody that is a round A contributor to companies like this gets to buy shares at a significant discount. That's why they start investing slowly and small and start, if you're the anchor investor, as they say, it's nothing new out here. To me, more interesting is that he is the key figure in this company. If you're unfamiliar with it, like I said, this is really kind of like a lot of those companies you hear about from, what was it? The Aviator movie. I'm just having a mental blank now, that he built that giant ship to go steal the Russian submarine off the floor. About half the things that he ever did. Why am I having a mental blank on his? He built the Spruce Goose. I just can't think of his name right now. Somebody in the den will say. But Peter Thiel looking a lot more like that, getting involved as the public face of a Howard Hughes, of a very private company. But very interesting to see this. But I looked into it real quick. I was expecting a lot more hateful articles to come from San Francisco and Silicon Valley. Saw some fairly dismissive people on CNBC taking some cheap shots at the guy. I don't think he said anything that really changed the needle one way or the other. But last thing, I wanted to see whether or not you could have a different political view and still exist in Silicon Valley. The question will be whether you can, and we'll probably see that in the near future out there. But very tough for anybody to have a different idea out there. We'll see how this develops. That is all of that. It is a mad market. And of course, a terrorist issue going on right now in Germany. But I don't know if there's, is it just happened so many times now that no one cares anymore? I'm wondering if that isn't exactly what we're looking at. We'll go through the movers here today and maybe a few other stocks making issues if we have time. Probably the most interesting thing to me is, of course, the Boeing company. Energy on this last leg up wasn't all that bad, but what do we have now? It is below a 3x3 displaced moving average, although very close and a little higher out here. Watch how this closes today. More interesting is the volume. Not all that exciting. They took one more charge. Everybody's just kind of wondering when these charges will stop. Their charges related to the 787 Dreamliner. And that reminds me, I need to call them and ask them why my Dreamliner isn't sitting over here at the Clearwater Airport just yet. What else do we have going on out there? Yeah, 787s are not just for Silicon Valley. They're for people in Clearwater and Tampa, too. Bruker Corporation didn't have a lot of moving out there. It had some earnings, but didn't seem to do much. Gapping down is Contra Effect Corporation, CFRX. Not one I've heard of before. Light volume. We'll get rid of that one. Celestica, CLS. Some decent volume on this one as it gets back up to $11 on earnings. Decent volume out here and a breakout. You might want to keep an eye on that. It's right at the $11 range. We will find out more about that. CMG, of course, coming out, trying to get its mojo back. Its mojo with higher volume, 3.2 million shares. This thing was and did have a lot of shorts. We've been talking about this one for the last week or so. You kind of have to like this movement out here. I would have had to have it actually test the low for me to buy it from my discipline, but you know, you could have made a case that it did do that on the 7th. You had a little more volume though, and that still would have kept me out. This thing had some high short interest. In fact, let's look that up real quick. CMG. And we'll look at that. Days to cover was about 4 days to cover on it, so there was a lot of folks on doing that. As far as going into it, I'm going to say for the last 4 days, we've had about 20% on average of all the shares being instigated as shorts. So a lot of people were betting against this one going into earnings. But you got volume out here. The question is this just an ABC up, a one-day wonder? Or is there more to this? Discussions in the den. I go to Tijuana Flats, which is I kind of like a little nicer, a little less pretentious, a little more fun, as someone said in the den. We'll look at this one a little more when we come back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we were looking at Chipotle, just a kind of final thought back there. Nice big move out here. Most of the moves that I've seen like this that have the big candles and too much volume, yes, you can have too much volume, end up being kind of a buying climax, at least for a few days. This is one where you really want to look and see the direction of the market if a bunch of cash comes back in. But at worst, you want to count about 3 days in this one for the shorts to cover, and then actually see what the reaction is after that. I don't know how many people would dive into this. It's not going to be 4 days to cover is still pretty big for a $440 stock. So you got to figure that anybody that's short this thing is probably a big man on Wall Street and has a lot of cash. That's not theirs. But normally the weakest hands will be out in a few days. It may not go much higher than this. There's a gap there right around 455. Maybe it gets up there and maybe even a 467 and take a look at it. But you've got a nice movement. And this is the problem with not shorting this thing when it's $750 and trying to short it down here and being on the wrong side. Pretty easy to just get a move like this that squares a lot of shorts out of the market fairly quickly. Got a couple of emails and questions from the den, so we'll go to them. We'll go to the den first. The first one is AAL, American Airlines. This is certainly one of these stocks that you want to keep a very close eye on. The reason why is this thing has a very nice setup for a double repo pattern. That is, any close now below the 3x3 displaced moving average you want to look at as a possible short. If we go back to the 9-day traditional moving average on it, kind of the same thing. It hit the 9-day yesterday and bounced back up. But if you see anything like a move back down, you want to be looking at this one very closely. You still have high volume lows that are untested back at $24.85. Volume wasn't bad. It wasn't great yesterday. It was higher than that. But this is one of the danger signals out here. Normally, you'll get one more move down or just a general failure below that line. But this is one of these stocks that you can't let it have an inch if you are long. And if you are thinking that airlines should be shorted, any kind of tick down on this thing that gets it under this line would be most interesting. Oh, airlines earnings today? I don't think so. I looked at all of them. I will check that out in the next break, but I don't think so. I don't know of any stock that reports after the bell on Friday. I'm trying to remember if I've ever seen one. Don't think so. So maybe it's just wrong. I don't know where you're getting your AAL. Cintas, of course, it did report just the other day. So let's take a quick look at that. You can, of course, email me at path@tfnn.com or call me at 877-927-6648. This one's still looking good, but here's kind of what I was talking about in these stocks that just have all the volume in one day. You don't tend to have a great deal of that. You want maybe something like 200% volume, maybe 250% volume. You get 400 or a lot more of that. What is this? 3.3 million shares the day before. You had 700,000 shares. You get into that 400 or 500% volume moves of the days going into earnings. That tends to be that real exhaustion move in the market. And I don't know what else you can say about it other than that. The market just exhausts. All the energy comes in one day, and that's it. So when I get these kind of days, you see all that kind of volume, I'm more than willing generally to just go ahead and take the cash then. Although you get people on the wrong side of a stock like this, it'll probably hold up here for at least 3 days anyway as shorts exit the market. And, of course, longs think, well, anybody on margin, we've got 3 days for them to get out. We're going to wait for the signs of them getting out. Today's light volume would be very problematic, though, on that. Going into a Friday, a lot of times that's it. No one wants to hold it until Monday. They'll go ahead and take the cut today. And since you don't have a lot of volume, if I was long this and thinking it was going to pull back and I'd want to buy it on the pullback. I would probably go ahead and take my money today in this. What else do we have going on out here? I think that's something else. Capital One Financial. As we said on this, once these things started cracking below the moving averages, or in my case, what I like is the displaced moving averages, you have to start looking at them. I said that 3 sectors looked kind of weak to me. That was biotech, financials, and of course, energy. This is, of course, in the financial sector. Didn't do much, down a little today, but certainly a lot more volume. You can make a fairly decent case that this is an ABC down. And see what we have here. Let's clean this chart up. See if we can get the... you can use that bigger one up here because it was actually had a kind of a smaller ABC. You can also use the smaller ABC. Let's take a look and see what this thing looks like if we use the smaller ABC on this. Okay. If you use the smaller one, it retraced 70%. That would set you up for a 1-to-1 for $53.18. If we go back further in this one, we're just back 6 months. Let's go back a couple of years. Is there anything around that area? We may even have to go back farther. Yeah, we can look at all this stuff back here in the... you don't have any big volume days. You do have this gap down, though, which would probably be in this area. You know, you've got the lows back here. That's the March 1st, 2013 lows. This ABC would take you back to there in Capital One. This thing's been kind of ratcheting onto the downside. You know, your real sign here for me was the energy on this leg up from January 25th to April 21st that just never really came back, never even was able to test the previous high, and energy never really came back down. Just been ratcheting to lower lows. And of course, you couldn't really have liked this going into earnings too much. The January 25th low at $5.70 was tested with 8.9 million shares. It went below it, kind of came back up here for a little while, but you still had that high volume low, and that spells danger. And in my town, they spell it POOL. We'll be back after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. Yeah, American Airlines came out this morning, and probably the reasons that you have to look at these is that figure again. They're talking about 6% on lower average fares. American said that figure will fall again in the third quarter. So they're not saying things are getting any better in the next 90 days. And these terrorist attacks probably don't help anybody if you're talking about taking a nice vacation, let's say to Munich in the summertime, as that is today. Although I've been by that mall a long time ago, 20 years, maybe 15 to 20 years ago. I've been in that city and passed that mall. Just saw it on TV. What else is going on out here? We had an office there in Munich. Let's look at a few others. Facebook. Wanted to see how this is doing. Earnings next week for this company. Come on, Mr. Fakebook. Come on. Wanted to look at this one, mostly just because of the action here going into this. But some of the stuff I've been reading this week makes me wonder about how Facebook is doing. Certainly the volume going into next week, pretty poor. 87 million shares back on May 11th, just 20 million shares going into this 122 area. Basically, when it, that day, what was that, April 28th is when it reported last. That big gap up with lots of volume. Getting back into it for this earnings now. But some of the articles I was reading talking a great deal about how Facebook is not the leader anymore in online traffic, that a lot of the new messaging apps are now. Of course, Facebook has their own messaging app, but there are others, especially in the rest of the world. And that is where the weakness that Facebook is looking at would come from. I don't know if it's going to make a difference in this quarter, but there are people that track all online activity to see where the traffic is flowing. It's fairly easy to do if you have access to network metrics for the bigger metrics, for the bigger backhaul internet providers. And they do push that out, but it looked like Facebook traffic was coming off a bit. And we're seeing a lot more people kind of try to drop Facebook as the way to message everybody. And the question is, does that mean that that translates into their big money maker, which is all the ads, all the other stuff that goes on to Facebook? Certainly the chart looks interesting. The volume off this last low to 108.23 on the Brit exit on June 27th on the back way up was maybe about 10% lighter, maybe 12% lighter, back up to this high. So energy wasn't all that exciting off the British exit. Volume down a little bit lower. Does this mean the end of Facebook? The answer is no. But this thing is at $122 for a reason, and that is everybody believes this thing is doing nothing but going to the moon. Any hitch in the upside to this, and we could see the same kind of reaction that we saw in Netflix. Both of these companies are all primed for absolute perfection, not only in revenues, but in customer growth. And at one point, Facebook will hit the law of big numbers. My guess is when it does do that, and it could be as early next week, that this will probably act a lot more like Apple. And that is that we could see this easily come 30% off the top on any kind of real hitch in subscriber growth. I wouldn't call it subscriber because it's free, but what is it? User growth, I guess, is the way they look at it. So you want to keep an eye on it for that. What else is going on out here? General Electric came out with earnings this morning, and not so good. I've got a subscriber that's a big proponent of GE. I just never understood getting involved in it. It's one of these companies that moves at a glacial pace. That's probably the thing I have against it the worst. But a nice big gap down today. Volume not all that exciting just yet. But we shall see how this thing closes. Again, most of the people that are in this are in it for the next 5 years. So you don't get a lot of volatility out of this. But even yesterday, it closed below the 3x3. Some of these stocks were giving some issues. Volume was a little bit better. I mean, you got up to 42 million shares back here on the 15th, which was enough to signal a valid high over the March 31st high. Maybe a little bit too much too soon. I kind of sold some positions this week just for that. They had nice runs, but you had a lot of you had some decent volume, but not enough. But I think it's going to take a little while for General Electric or shareholders to really get a feel how its move to software and engineering and away from its traditional businesses that it sold off actually affect it. And not the end of the world out here. A lot of people own this for the dividends. It's a patron saint sister company acting exactly the same. That is Honeywell, the big industrial company, down on heavy volume today, though. So maybe that will give you a little idea of these two horses, which one is probably a little better off. 7 million shares already today for Honeywell. That certainly takes you back into the 110.20 July 27th low that had 3.8 million shares. Didn't quite get there today, but you got to look at that candle being tested, which is a minimum of what, let's call it a 111.70, 111.50, something like that could be it. Of course, you can give me a call at 877-927-6648 as we go into the weekend. Look forward to your call on a quiet Friday. Got lots of stocks to talk about, even if we don't. Got a couple here in the email that I may answer on the air in the last segment if we don't have a caller. When we come back, I want to talk about cereal malt beverages and some other stocks. MCF, we'll try to get this one in here before the end of the day. Contango Oil and Gas. Boy, could there be a stock that has a better name? As I said, we were looking at this energy sector as being fairly weak. I can't say that this speaks for the entire energy sector, but not a good sign to have this thing crushed on Friday going into a weekend, 3.4 million shares, when most days the volume is incredibly light in these companies. But maybe a little preview of what we're starting to see in another one for you folks in Lutz. Contango, of course, is the front month against the back month in futures, and you can look it up if you want. But very interesting to name an oil company after that, oil and gas company. I'll have to find more out about this company. When we come back, it's cereal malt beverages.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
My songs I have casually mentioned the fact that I like to drink beer. This little song is more to the point. Roll out the barrel and lend me your ears. I
like beer.
It
makes me a jolly good fellow. Like beer. And of course, if you owned shares of Boston Beer Company, you'd love a beer today too. This thing's, I was really kind of shocked when I looked at the volumes in this thing over the last few months, but you know, not a whole lot out here in the way of a volume. Certainly had a lot of people on the wrong side of this one. It gapped up. It's got all the volume in the world for this particular chart out here. Again, a lot of these, everybody's on one side of the fence or the other, so you get a lot of movement in these stocks that are really rather thinly traded, 100,000, 200,000 shares a day. That would have kept me out. I don't really play stocks that have less than 300,000 shares a day. I've done a lot of studies on them, just something that I don't do for that reason. That is, of course, being tough. You know, the entrances are very, and exits are very narrow on light volume stocks, and especially if I put them in my newsletter. But everything you want out there, but I can't say this is any different than the rest. A lot of volume, huge candle. My guess is this thing's going sideways for 3 days. Not a lot to say about it on that. What else do we have going on here? Of course, the one that probably has everybody screaming and ready for the loser horn out here is Skechers, down in huge volume, blowing out all the previous lows today. So if you were looking for a sign of the end of times, probably Skechers as close as any of them. The highest volume was 2.47 million shares. This goes back to the November 16, 2015 low. And of course, you don't want to be long stock with an untested high volume low because it is not a low until it's been retested. Thank you, Tim Ward. A low is not a low until it's been retested. And that's what you always have to worry out about. It came close a couple of times, nice bounces out here. But interesting to see yet another retailer, or at least maker of retail tennis shoes, have this kind of issue. But man, when you blow away lows like this, let's go back a lot farther and see if we see anything in this. You know, you're back. You've busted this area. You know, you get back 1592 goes back to October 15th of 2014, which is the next real big area, and even signs of life and volume are in that $15, $16 area. So, and I'd watch this very closely. If this does not move back into the trading range at all, and you're long this thing, you probably have danger down to that $16 or $17 level. As always, we appreciate you listening here at TFNN, and especially me at the Power Trading Hour. So what do you want us? What I want you to do, I want you to tell one friend, maybe two friends.
And he tells two friends, and she tells two friends, and so on, and so on, and so on.
That's right. And of course, since it's free, get to listen to us free. And just pass the word, the good word along. In the meantime, sell when you can, not when you have to. We will see you back here bright and shiny on Monday. Sell when you can, not when you have to. Remember.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.